Hello everyone, welcome back to Real Talk Investing. In today's video, I am going to be going through my full investing portfolio. Currently, we are sitting at over $62,000 invested in 10 different companies. I want to briefly touch on each position while also highlighting a few that have seen quite a bit of movement over the past month or couple of weeks. So we'll be going through positions such as HIMS, which is currently up over 132% in the last month. We'll be going over Celsius, who reported earnings today after hours and is currently up over 32%. And we'll also be touching on Palantir, which dropped 10% yesterday and has dropped an additional 5.5% today. So let's get right into it. I want to start off by going through my Amazon position. Currently in Amazon, I have about 28 shares with an average cost of $110.67. Amazon has seen a bit of weakness lately. Amazon did report earnings last week when their share price was right around $242, and during the earnings call, they did release that their guidance for Q1 2025 is a little bit lower than expected and is coming in between 5 and 9%, which is down from the usual 10% plus that we see with Amazon. Personally, I still think that this is just a sandbagging technique by management, and I am still expecting 10% revenue growth within Amazon. So while Amazon, yes, is down 7% since reporting earnings, I see this as a buying opportunity for Amazon. Every single dip in Amazon is a buy. They just have way too many growth vectors as a company between e-commerce, and then the AWS is obviously massive, and then their ad revenue that they get is growing like crazy as well. So yeah, if you don't already have Amazon, Amazon is a buy. I have not been buying Amazon too much recently, but this is definitely one that I could see myself adding if we see any more sell-off within Amazon. I think if it got down under 215, 210, I'd look at picking up a few more shares of Amazon. But for now, I'm just kind of holding my position, and I don't plan on selling anything anytime soon. Next up here, we have SoFi, which is currently trading at just over $15.50. I own 580 shares with average cost of $7.23. SoFi stock did drop after they reported earnings earlier this month, as they reported some lower than expected guidance for Q1 2025. Since they reported, after that initial sell-off, we have been seeing SoFi stock recover quite nicely, with them being up about 5% over the last week. So I think there's a lot of people out there like me who see SoFi growing into one of the top financial institutions in this country. So I don't foresee it dropping much lower. I think everyone who is currently invested in SoFi is still kind of just waiting to see how this one shakes out. Needham and Company did reiterate its buy rating as of recently, with a price target set to $20. So for those of you who are still sitting on the sideline, there is still quite a bit of upside in SoFi, as we could see nearly a 25% return from where it is currently trading. So SoFi, this is one that I am going to continue to hold. I don't foresee myself selling any SoFi shares for years to come unless something within the fundamentals of SoFi does change dramatically. Next up here is Shopify. Shopify is currently trading at $124 a share. They reported great earnings. I have 54 shares at the average cost of $66.45, and I'm up about 86% so far in Shopify. Shopify is a great company. It's one that I think is going to continue to grow very nicely over the next few years, and I have no plans of selling a single share anytime soon. Any weakness in Shopify, and I will be looking to pick up additional shares. As you can see here with Shopify, I have them growing their top line revenue by between 25 and 20% all the way through 2028, and I have their stock price appreciating from right around where it is today at $124 all the way to over $350 in 2028. And honestly, I think my numbers are a little conservative, and I would not be surprised to see Shopify at $400 plus in 2028. Shopify, if you are not invested in Shopify, now is as great a time of any to get into Shopify. The next one up here is Tesla. Tesla is an interesting position of mine. I currently own 17 shares with an average cost of $158 a share. I have sold out of about half of my position in Tesla over the last couple of months. Tesla had that amazing run up after the election where I think they topped out at something like $470 a share. So I was definitely selling into that momentum that we were seeing in Tesla, but I also don't ever want to sell out of Tesla completely. There's just too much going on here. I'm still waiting to see how the robo taxis play out, as well as their humanoid robots that they are working on. There's just too much here for me to say I'm completely done with Tesla, as Tesla's as a company that can run up on mediocre news or mediocre numbers. So I could definitely see Tesla getting to much higher levels in the years to come. I don't own very much, and I'm not really looking to add any additional shares in Tesla at these prices, but it is just one to keep an eye on and is one that I will happily hold for years to come. Next in my portfolio, we have Hims and Hers Health. Hims is a pretty interesting one over the last couple of weeks/months. Currently, I'm only holding on to 40 shares, and I bought in back when this was about $15 a share. It's been a one that has appreciated like crazy, especially as of late, and is one that I really wish I had bought more of when it was at these prices. But I did get a little spooked when Amazon announced that they would be selling a generic hair loss medication that directly rivals with Hims and Hers, but the stock price has done nothing but explode since then. I'm currently up over 330% in this one. I have been taking some profits. I think I've sold about 20 shares over the last week or so, as it's reached a high of over $72. It's just too much too fast. I do think we'll see a slight pullback in Hims and Hers, but you might be asking, is there any real news as to why Hims has shot up as much as it has? So what is one of the catalysts that has caused Hims stock price to explode as of late? Hims acquired Tribe Labs, which is an at-home testing facility, which will then allow Hims to test blood samples sent in through the mail. This will remove a bunch of friction and the walls that kept some clientele away from Hims and Hers. This is mostly targeting the customers who don't really want to go into a physical location or don't have time. It just adds to the overall convenience that you see with Hims as a online healthcare provider. Apparently this is going to lead to increased customer growth for clinical categories such as low testosterone and menopausal support. So this has been one of the main reasons why we have seen such an explosions in Hims, but I'm not quite sure the acquisition really justifies as much growth as we've seen in Hims and Hers. So I will continue to sell my position as it continues to go up. If it plateaus, I have no problem holding on to the shares that I do have, because I do still think that Hims is a great opportunity, but at least a great opportunity for those who are already invested and have a position in Hims. I don't think I would recommend starting a new position at these levels, as we could see a pullback on any negative news around Hims. So next up here, we have Celsius, which did report earnings today. They reported 3% revenue growth, so really nothing crazy here. So you might be asking yourself, with 3% revenue growth, why is their stock up over 35% after hours? And that is due to an acquisition that they announced. Celsius announced that they will be acquiring their rival drink energy maker Alani Nu for $1.8 billion. Now, if those of you who don't know who Alani Nu is, they are a company pretty similar to Celsius, so they are going to fit in very nicely into the Celsius portfolio. They are another health-based energy drink provider and maker. They are mainly focused on the female clientele. I think on their earnings call, they mentioned something like 90% of their social media following are female. So it's definitely a great play, I think, for Celsius to try and tap in with the female health-based energy drinkers out there, as I think Celsius is more catered towards men, with more of a 50-50 split there. So seeing it, adding in this one, they're really going to capture that young female Gen Z millennial market share. So overall, I think this was an amazing decision by Celsius, and shows that Celsius is going to get back to some really strong revenue growth over the next years to come. I had to update my Celsius predictions, as I think I only have them growing their revenue by 10 or 15% this year. But with the acquisition of Alani Nu, that is set to go through in Q2 of this year, I think their revenue growth will grow something like 45%. I definitely see their revenue getting up to right around $2 billion this year and just continuing on that amazing trajectory for years to come. So the stock price jumped up quite a bit, but this acquisition definitely justifies it, as I believe Alani Nu was the single biggest threat to Celsius. So it's great to see Celsius capture their market share and bring that into the Celsius portfolio. By 2028, I have Celsius stock price coming in right around $88 a share, possibly breaking $100 a share by then. And I think that's definitely possible, especially if they continue to make acquisitions like the one they announced today. I definitely see Celsius becoming a major player in the energy drink market. And I see them competing directly with Red Bull and Monster, and one day getting to a similar market cap as both of those companies. I would not be surprised to see Celsius with a market cap between 15 and 20 billion by 2028, if not higher. So Celsius, I am still a buyer at these levels, even with the latest jump in stock price. I think Celsius is still a buy with this new announced acquisition. I think anything 45 or under is a buy for Celsius. I don't have a ton. I'm currently sitting on 90 shares with an average cost of $26. Obviously, with the news that came out today, I wish I had expanded my position much more than I currently had, but you live and you learn, and I am going to continue to dollar cost average up into Celsius because I definitely believe in the long-term story here with Celsius. Next up, we have Nike. Nike is currently trading at $77 a share. I own 70 shares with an average cost of $76, so I am just barely up in this one. It is a newer position of mine and is one that I will continue to add at around these levels throughout 2025. I believe it is a great turnaround play, and that Elliott Hill is going to right the ship. Nike has obviously been in a tough spot the last couple of years, and their stock price is definitely reflecting that. As you can see here, over the last year, they're down 25% over the last year, and since 2021, they reached a share price of $177. So they've lost about $100 in share price over that time frame. I think now is a great time to enter Nike. They have some pretty exciting stuff going on. Nike shares are up 7% in the last week after they announced a partnership with Kim Kardashian's company Skims, which is a women's athleisure wear brand. Nike has made it very clear that this year they are going to focus on growing their athleisure brand. So this is obviously the first step there. Nike had their first Super Bowl commercial in almost 3 decades, and this commercial featured pretty much every famous female athlete that you can think of. It's obviously going to be a key focus of theirs this year. As David Schwartz says, the women's business has faster growth and has more potential growth in the future. Nike missed out on that opportunity that Lululemon exploited over the last 10 or 15 years. So this is definitely going to be a great partnership, I think, for Nike. I don't know too much about Skims, but I think this is really going to help Nike get back to the revenue growth that we are hoping to see from them. So all of 2025, I think anything under $90 a share, I will be a buyer of in Nike. I am not planning on selling any of my shares anytime soon. The more I can grow my position, the better dividends I will receive over the next few years. I foresee Nike getting back to that $100, $150, $180 range over the next few years. So Nike is a great turnaround play, and it's one that I would recommend in your portfolios. Next up here is Estee Lauder. Estee Lauder is currently trading at $72 a share. I own 50 shares at an average cost of $67, so I'm up about 8% so far in Estee Lauder. Estee Lauder did report earnings a couple of weeks ago, and their earnings were not great. They actually sucked. They really had nothing positive in their earnings. Before earnings, they were trading at $82 a share, and they instantly sold off back to the $60, $65 range. So nothing that exciting in their last earnings call, but I still see a lot of potential in this one. I do still plan on picking up a few more shares of Estee Lauder. I think it's another great turnaround play, similar to Nike. You might ask yourself, why has it not dropped lower? Like everything in their earnings was bad. Like there was nothing to really build off of. The only reason you get into Estee Lauder is because you believe in their company portfolio. They have way too many large brands to completely fail. Obviously, over the last 5 years, Estee Lauder has dropped from $370 a share back in 2021 to 60. Where are they at? $71 right now. So, if we're going to sell Estee Lauder, you have sold Estee Lauder. I think most people, pretty much everyone that's currently in Estee Lauder, is comfortable holding and just seeing how this all plays out. Estee Lauder did appoint a new CEO at the start of the year, so I think that could be a catalyst to definitely get Estee Lauder back into their growth segment and see their revenue start ticking back up, as it's just been doing nothing but decrease over the last few years. So Estee Lauder, it's definitely a riskier play. It's not one that I'm going to build into a massive position, but I like it at this price point, and is one that I may still continue to add to over the next few months, and we'll just kind of see how this one plays out in 2025. All right, we have made it to Palantir. Palantir is such an interesting company as of right now. It has had an amazing run. I still have about 100 shares of Palantir, and I'm up about 900% in this one. I was up about 1100% a couple of days ago, but as I'm sure all of you know watching this video, Palantir has had a pretty major sell-off. I think it dropped something like 10% yesterday and is down an additional 5% today. Palantir did drop below $100 this morning, which is crazy considering that it was at, I think, $125 a share yesterday. Yeah, right around $125 yesterday. So what happened with Palantir? Is it a buy? Is it a hold? Should you be selling? Let's talk about Palantir. So Palantir had two major things happen. First up here, we have Alex Karp, the Palantir CEO. He announced his plan to sell almost 10 million shares, which would put that value right around $1.2 billion of Palantir stock. Now, while yes, this is not fun as a Palantir shareholder to see this kind of selling pressure from their CEO, it's not something that we aren't used to. You know, as you can see here, Alex Karp, he sold for over 40 million shares of Palantir in 2024. So it's just something that he does. He is selling into the growth of his company. You know, he's on track to sell 50 million shares of Palantir, which is crazy. So that's bad thing Palantir number one. I don't think we would have seen this serious of a sell-off if there wasn't another piece of bad news that came out on the very same day. The other blow came from potential defensive budget cuts. They have identified about $50 billion in programs that could be cut over the next year. And I think a lot of people are thinking that this is going to hurt with future contracts for Palantir and lead to slower revenue growth in the quarters and years to come from their government contracts. While yes, that's a possibility, Daniel Ives right here, he makes an interesting point. He says, in our view, Palantir's unique software approach will enable the company to gain more IT budget dollars at the Pentagon, not less, despite these initial knee-jerk reactions from the street. I definitely agree on this one with Daniel Ives. I don't think this is as big of a deal as people are making it out to be. I don't think this is going to have any significant impact on Palantir and their government contracts, defense contracts moving forward. So I don't know if I would say Palantir is necessarily a buy right now. The valuation on this one is absolutely insane. The fact that Palantir has a higher market cap than companies like AMD just blows my mind, but I mean, I'm not complaining as a Palantir shareholder. For me, I've sold out of 31 shares so far. I've already taken out 3 times what I put into Palantir. I have no problem holding on to the shares that I do have with Palantir. I think this one could recover nicely over the next weeks and months. I definitely could see it getting back to the levels it was at and breaking through those, just because there is still a lot of momentum built up in Palantir. But if you aren't already in Palantir, I wouldn't, I don't know if I would get in at these levels. It's, as you can see, like when it drops hard. And I feel bad for those right now that bought in yesterday at $124 a share, because it has had so much momentum and it seemed like it was breaking to new all-time highs day after day. So eventually, we got to that inflection point and we've seen a pretty significant sell-off. So I could see this one dropping lower. I could see it going back under $100 per share. I am not a buyer in Palantir until it gets to the $60 or $70 range. That's when I would maybe scoop up more Palantir, as the risk reward's just a little bit better at those levels. Last up here, we have AMD. AMD is a company that I have been adding pretty aggressively over the last few months. I'm currently at 65 shares at the average cost base of $123. So I am down about 8% in this one. I'm just going to keep buying. I think AMD is a great company for anyone that has a long-term outlook. I foresee AMD getting to much higher levels than it currently is right now. AMD did sell off after they reported their last earnings this month. They were trading right around $120, and they came in with a little bit lighter guidance than I think Wall Street was expecting, and they did sell off down to almost $100 a share. I think it got down to the 103, 105 range. Since then, it has recovered nicely to right around where it's been trading these last few days, $113, $115 a share. So AMD is definitely a buy for me at these levels. If it keeps going down, I will keep buying. If next quarter, when they release their earnings for Q1 2025, if they have lighter, if their revenue comes in lower than expected, I'm still a buyer. I definitely foresee AMD being a great company in 2026 and on. Looking through my estimates for AMD, I have the revenue growing from $33.5 billion in 2025 all the way up to $73 billion in 2028. With that being said, I have their share price appreciating from where it is today all the way up to $440 in 2028. I think there's just way too many growth opportunities with their data center segment, their client segment, and I even have their embedded segment, all being major growth factors for AMD as a company in the years to come. Gaming, I think, will stabilize. I think it will always kind of be a bit of a lagger for them as a company, but even that, I don't think will be as much of a drag for AMD as a company in the back half of 2025. So I love AMD at these prices. I loved them at $125 a share. I think they were a screaming deal at $105, and I still think that they are a buy all the way up to $140 plus. So if you are not an AMD shareholder, I do think now is a great time to start a position. AMD has been a stock that has been covered a lot right now and has been getting a lot of attention. And I think it's all for great reason. I think it's an amazing buy. So there you have it. That is my full portfolio as of right now. It's been a crazy few weeks. We've seen some pretty crazy price swings. I've seen my portfolio drop down, thousands of dollars a week over the last few weeks. So it's still a fun time in the stock market. I'm still fully invested. I don't think we're in a bubble. I think 2025 is going to be another great year in the stock market. So, get out there, do your research. Remember, I am not a financial expert. These are just my opinions on these companies. If you did enjoy this video, I would really appreciate a like and subscribe to this channel, as it really does help, especially for the YouTube algorithm. I'd love to get this out to more people. So thank you all for tuning in. For those of you who did make it to the end of the video, I really appreciate you, and I will catch you in the next one.